Okay, cool. We're recording. Yeah, we're recording. Yeah, okay, cool. So dollar Swiss franc is definitely a downtrend. So we do want to continue selling this one. We have the daily EMA to the downside, the 200 EMA. So we're under the 200 EMA. As you can see, this whole time here, provided we remain under that 200 EMA, it would not be in one opportunity I would have bought that market. It would have just been continuing to sell, right? Selling, 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 selling. Even now, where it sits, I'm going to continue to look at selling this market, right? We're coming into a big resistance level, all right? What we need to see is some sort of reaction off of this resistance level. That could be rejection candles followed by bearish engulfer. But as long as we can see that price is stalling here, then we want to, start looking at taking this short to the downside. We do have oversold, sorry, not oversold. As Mohammed just pointed out, divergence happening, which is really good. That shows momentum potentially to the downside. But in saying that, we still need to see the price action line up in our favor. So we want to see rejection, rejection, follow up with that bearish engulfer, and that's going to tell us that, hey, this market's ready to continue to the downside. So that's what we're going to look for on dollar Swiss franc. That's what I'll be eyeing off. But again, what is it? It's only Wednesday. I keep thinking today's Friday. So yeah, that could happen, in the next 24 hours or so. So we'll see. We'll see what happens on that one. Euro yen. So euro Japanese yen still holding above this resistance level right there. We're failing to push higher, we're failing to push lower. It's just playing around at these levels at the moment. What do I want to see to look at going long on this one? Probably a little break of the little pennant right there. That's how I'll be playing it. We do have that little bit of a pennant happening right there. A pennant happens when you got these lower highs coming in, higher lows. So you got this lower high, higher low, lower high, higher low, lower high, higher low. So it's making a little bit of uptrend, but it's also making a downtrend. Usually, in conjunction with the overall trend of the market, you can usually see a continuation to the upside. So that's what I'm expecting in this market, right? We're holding above the resistance right there. We've got this nice little pennant happening. You can expect this to break to the upside eventually. A little bit amateur to take it now, but it's something we'll be watching, over the next few hours or whatever, just to look at taking this higher. And there's no need to go on the 1 hour chart and that sort of stuff. Just a 4 hour, right? Just in the 4 hour. I don't do much top down analysis. Right? I'm more so just daily 4 hour and go from there. I don't, I'm not big on sort of going monthly, weekly, daily, 4 hour, 1 hour, 30 minute, 15 minute, 5 minute. That's just a waste of time, in my opinion. Just have your three or two time frames that you look at, 2 or 3 time frames. That could be, weekly, daily, 4 hour. It could be 4 hour, 1 hour, 15 minute. It can be whatever. But you just pick three or two, right? For this whole year, last year, I've been just sticking to the daily and 4 hour. Before COVID, I used to look at the weekly a lot, but during the whole COVID thing, the weekly kind of just got thrown way out of whack. So since then, I've just been sort of daily 4 hour most of the part. So yeah, anyway, that's what we're waiting to see on Euro yen. Break above there, look to go up. Pound dollar, so definitely still kicking to the upside. My targets are still set in motion right up here, up at 142,500. So I do like this to the upside. Now, interesting thing, I was just sort of monitoring the chat yesterday, and I saw a couple members, wanting to short this and all that sort of stuff. And look, everyone has their own strategy. I'm never going to say someone's strategy is wrong, because I'm not anyone that can say that, because any strategy can really work in trading. You just have to use it wisely. Some are better than others, but in saying that, they were talking about failing to make higher highs and this little push down on the 1 hour chart. And something you have to understand is that the 1 hour chart really has no significance on this overall daily trend, right? If you're looking at this market right here, and you can see it's been bullish for well over 2 months, 3 months, it's been bullish. That should tell you should be looking to buy this market and not selling it, right? In my personal opinion, it's useless going to the 1 hour chart and going, well, we have a little bit of double top rejection. We should sell this for that little retracement, when bigger profits, safer trade can be made looking to buy instead of catching these little retracements, right? Bigger risk to reward, better hit rate in your trading, that sort of stuff. Not to sort of toot my own horn, but if you were using my trading system this month, it would have been hard to take a loss. Took a couple of losses at the beginning of the month, but I think the last like 6, 7 trade, whatever it is, I don't know, have been extremely profitable. 6, 7 trades. They've all hit profits for well over 1 to 2. So I could take the next, 5 or 6. I could take next 10 losses in a row and still be up in green at the moment for this month. So you just sort of, forget about these little retracements in trading and look for the overall trends and, try and buy into that, right? Don't fight it. That's the worst thing a trader can do, is try and fight that trend, because it's kind of like going up to a train and punching it to try and stop it. It's not going to work very well. Dylan, I think order blocks are kind of useless. It's just like one of those things where traders use to sound really cool, like, oh, I know what the institutions are doing. They're in the order blocks. It's just like an Instagram thing. Like, order blocks are real and that sort of stuff, but it's just like one trader will hear about it on Instagram and then he'll do a whole course around it, which he doesn't really know what he's talking about, because a lot of the stuff that I've seen about order blocks, people don't even know what they're talking about. And then, a lot of people don't actually know where order blocks are. Order blocks are very simply like these little points right here, right? You got these little points there. A lot of people think order blocks are, a little bit different than what they actually are. So just ignore. I don't use them myself. I keep my trading very simple, right? I'm just looking for a simple pullback into a relevant area, whether it's support level, whether it's a Fibonacci level, right? And that stochastics, and that's it. Right? You don't need much else in a trading system. Don't over confuse yourself with order blocks and all these Elliott wave stuff, and sure, that stuff can work, but is it necessary? No. I used to think it was necessary when I first started learning how to trade. So funny enough, is my mentor. I had 2 trading mentors when I first started. One of them worked for Deutsche Bank and the other one worked for Barclays Capital. And I actually had the exact same question about order blocks. I said, what are these order blocks? Are they good? Sort of stuff. And they just said, what? It's one of those things that, we use every now and then, but it's not like a big thing we use in our trading. Some traders use it, obviously, but he said the majority just don't really bother with those order block levels. It's more of a marketing material for Instagram right now, right? So yeah. Christopher, hey guys, new to the group. Anyone know large FX contracts? You mean anyone know if large FX contracts? Do you mean when you say large contracts selling? Do you mean like big institutions sort of like taking out their profits and that sort of stuff, closing their trade contracts? Joe, is it better to have multiple orders open or just 2? 1, 2? Depends on capital, as long as I have breaking and stuff. Really, that's another thing I don't do. I don't scale into trades, right? You have to think about in terms of, if you have multiple positions, right? Let's say you buy here and then you buy here and then you buy here and then you buy here. What happens if that all just turns around right on you? In my opinion, right, it's just better to just have that one trade, let it run, right? And if you do want to enter, scale into the trade, give it some time, right? Don't sort of do it here, here, and here, and here. Enter here, let the trade run up, maybe start looking at entering here, but not so close to each other, right? At least so you can secure your loss if this one comes in. And what I mean by that is that, let's say you enter here and then you go up and you scale in here, at least so you can move that stop loss to there and still make money, even if this trade here loses and that one gets taken out at trailing. The thing I don't like about scaling in is it enlarges the loss, right? And traders have to think about losses over winners, right? Whenever I take a trade, I don't think about the money I'm going to win. I think about the money I'm going to lose, right? You just can't think about the winning profit. That's going to send you into sort of gambling frenzy, right? Really, Dylan, is there So these things are not new then. Your peeps going crazy. Yeah, they're not new. Don't listen to Instagram is the worst place to get trading advice. Like I see 22-year-olds on Instagram saying that they're experienced, they've been trading for 10 years. Like, okay, cool. You started in your mother's womb. Like, you can just look at some people and go, you're not a professional trader. Like it's so easy to spot the fake traders. Instagram is a playing ground for them. It's so like, don't, whatever's trending on Instagram, ignore it because it's most likely just a good marketing tool. So yeah, don't. I hate that. I love your style trading, but I don't see the point on back testing because depending on the pair, you may have different results. Yeah, look, some people don't like to back test, and that's totally fine. Forward testing, in my opinion, is better. I back test to get the data, average winning, average losses, and it's much faster to do it. But then, what do you call it? Then forward testing, in my opinion, is much better because forward testing you actually see it in live, and forward testing you can do it either on a small live account or just on a demo account, and you forward test it for a few months, right? Not for a week, not for 2 weeks, but maybe like 3 months, right? One quarter, like a quarter, and then if it goes well, then it's so much better. Forward testing definitely has better results if you ever want to sort of test a trading system. It's just back testing is way quicker, right? You can back test 10 years worth of data in a weekend. Chris, yeah, for example, if a large institution purchased euro dollar for 150 million and sells it on Friday, would that move the market? It could move the market a little bit. Right, where is it? Euro dollar. So Aussie dollar, for instance, had a $3.6 billion settlement. I think it was last week, end of last week or beginning of this week, and it was just that move there. So, it takes a lot to throw around in the market to move it. Scared of large stop loss in 4 hour. Can I use tighter stop loss enter? No, mate, Rudy, you got to settle down, bud. No, look, I'm not having it. The problem, that's another problem a lot of traders have is they have tight stop losses, right? Why do most traders fail is because they're trying to do the same thing what they see every other failing trader do, tight stop losses, big risk rewards. For instance, let's look at my stop loss on this trade, right? I entered here, my stop loss is all the way up here, right? As long as I can get a minimum 1 to 2 out of it, I'm happy. CAD yen, how big my stop loss is on this one. Enter here, my stop loss is under this low here, right? When you have a tight stop loss, if I was to have a stop loss there, yeah, sure, risk reward can be enhanced, but so can your loss, right? You're going to lose more than you actually win with the tighter stop losses. So if you want to have a higher win rate, sacrifice some risk reward and have a wider stop loss. And in saying that, it can be hard sometimes with a smaller account. And what I always say is while you're learning how to trade, you shouldn't even be trading with live money. Sure, it can have the emotions a little bit more enhanced and that sort of stuff, but practice on demo for 3 months. If you have 3 profitable months in a row on demo, then go to live account. But until you haven't had 3 profitable months on demo, you shouldn't be trading live, right? And when you're doing the demo, you should be trial and erroring different things, right? Okay, cool. So how's it going to be if I have a very tight stop loss? How's it going to be if I have a wider stop loss? What's the pros? What's the cons? I know on Instagram, again, I seriously hate Instagram because everybody on Instagram will show that, they've got a stop loss that big and a take profit like that big, right? If that was the case, these guys would be richer than Warren Buffett. You've got to sit there and sometimes think like on social media, if these guys are claiming they make what they make, they'll be richer than Warren Buffett, right? I've seen some people saying they make 200, 300% a week. Okay, cool. So in about 5 years' time, you should be, one of the world's richest men. But people fall for it because people are stupid. But yeah, so look, wider stop losses is really what you need in the market. You can't have a tight stop loss. You can, but you're gonna risk that having sacrificing your hit rate for a bigger reward. And it can work. It's just you have to be able to sit through bigger drawdowns, longer drawdowns. Hey man, Tim. Hey man, thanks for hosting this with Zoom. I'm not sure I understand that question, Tim. Hey man, thanks for hosting the webinar Zoom. Thank you, appreciate that. So I just want to ask what your MA and mind sharing, why you use these? Oh, MA, sorry, MA, moving averages, right? Yeah. I use the 20, the 50, and 200 exponential moving averages. So I use them in the direction of the trends, okay? So I use them as order angle separation sort of markets. If price is below the 200 EMA on the daily chart, I'm only selling the market. I'm never buying this market. So even if price comes all the way to that 200 EMA, I'm still selling. I'm not looking at buying it, right? 200 EMA determines a trend, right? If we're under it, we're in a downtrend. Doesn't matter how good these little pullbacks look, I'm not buying it, right? Now the 20, the 50 determine the strength of the trend. So as you can see here, from, let's just mark it out. From, let's say, this point here all the way up into that point there, see how price remained under the 20 moving average, which is the blue one. But as soon as price went above the 20 moving average, we're between the 20 and the 50. I want to explain when I use the 4-hour and when I use the daily to trade. So on here, on the daily chart, okay, if price remains below that 20 moving average and the 50, like it has all this time here, I only want to sit on the 4-hour chart and I want to look for pullbacks in the 4-hour to sell, okay, using the stochastics as well. So I'll show you every single entry would have been valid for this one, that one, that one, that one, where's that? That one there. This one here would have been valid. That, there's a valid entry. There's a valid entry. We've got quite a lot of winners in this market, right? That one would have probably been break even or a loss. So they're all the entries I would have been taking. Now, at this point here, this colored part right here where it ends, price goes above the 20 moving average on the daily chart. And that's when I move to the daily chart and I'm only looking for selling opportunities on the daily chart. So that's what I use them for. So when it comes to the order angle and the separation, in a downtrend, 20, 50, 200, right? In an uptrend, you want the 20 above the 50, 50 above the 200. And the separation, the more separated they are, the stronger the trend. When they start to go very tight and compact like that, there's no trend. It's more consolidative. And here, you'd be sitting on only on the daily chart because we're above the 20 moving average right there. On the daily chart, I'm only on the daily. I'm not looking at the 4-hour right here. So, you know, but and now I'm just looking to sort of sell on a resistance level, that sort of stuff. So, and the angle, look at the clock face. You got 12 o'clock, 1 o'clock, 2 o'clock, 3 o'clock, 4, 5, and 6. In a downtrend, you want price to be at a 5 or 4 o'clock angle, okay? In a market that's not even worth trading, you've got a 3 o'clock angle, right? So the moving average is on a 3 o'clock angle, right? They're all facing 3 o'clock. These ones are all sort of facing that 4 o'clock angle there. In an uptrend, you want 2 and 1 o'clock. Right there. For an uptrend. You'll get used to it as you join more webinars. Joe, how do you do, Tone, I'll get to your question. Joe, what percentage of your trades? A lot of my trades are 1 to 2, 2.5, right? 1 to 2.5 to 1 to 3 is the majority of what trades I go for, Tone. But every now and then, like maybe like once or twice a month, I'll get that 1 to 4, 1 to 5. And then a few times a year, maybe 3 or 4 times a year, I'll get that big, you know, one that runs for months on end where that can gain me like 1 to 7, 1 to 8 sort of. But the majority of the time, 1 to 2.5, 1 to 3 is what I go for. Dylan, how do you deal with the FOMO scenario when you miss because you were away at it? Just deal with it, right? Markets are open 24 hours, 5 days a week, right? You're going to get another opportunity, right? Hopefully you're around for at least the next, 50 years in trading. There's plenty of opportunity, right? You just deal with it. You just, you understand that you're not going to catch every single move in the market. You just move on, right? Simple as that. There's going to be another trade next week. P shape, I've lost 30% in 1 year learning and has changed me. My journey just started. That's quite a big drawdown, but you can get it back. Hey Joe, I joined a bit late. I was going to ask you about Swiss franc, but I'm not. We'll go check that out. Tusha, how often do you use Fibonacci? Yeah, I use Fibonacci every now and then. So for this instance, I'll look at it and I'll go, from the high to the low, where are we sitting at? You can see we're at the 61.8% Fibonacci right here, right? And I like that, right? Cool. I don't always use it, but I'll sort of reference it every now and then if I think it could line up with a fib level. For instance, here. Okay, this is a really bad market to give examples on. Here, right? So if for instance, we're looking at this pullback back in December 2010, right? I'd be like, okay, cool. We're falling into a resistance level here, right there. Does that line up with fibs? Yeah, that lines up with 50%. Cool, I like that. So yeah, you can use it as much as or as little as you want, really. Joe, when will you be selling an online course? Do I have to get a Lamborghini first and start getting some fake US dollars and holding them up to my ear? Get some grills? Maybe I should do that first. Oh, Swiss pairs is very weak. Why? I'm honestly not sure why. Currencies go weak, currencies go strong. I don't really look into the why a currency is weak or strong, Mohammed. I just go with the flow of the market. 100% technicals, 0 fundamentals. Really, if 2015 is, damn, it's not separated. Yeah, so I mean, for instance, if I was to see a trade on this one, let's say I saw a nice big rejection candle, and I saw like a setup that I really liked, I'd still take it, right? We're still below the 200 EMA, we're at nice resistance. And as long as the 200 EMA, as long as price isn't bunched together with the EMAs, and what I mean by that is as long as we don't have that scenario right there, that's where I would not be trading, right? Because you can see how there's just no trend. There's no momentum in that market. Whereas this one, we still have pretty nice momentum, right? We have the nice flow right there, 200 EMA. We're still far away from the 200 EMA. So yeah, I wouldn't mind taking that one still. Why don't I move stop loss to break even when it hits one reward? Because that is a good way to get taken out at break even a lot. So there's been so many times in the past where had I taken my stop loss to break even at one reward, I would have missed out on bigger trades. And I've just found over the years of trial and error in moving my stop loss to break even and moving not. Had I not moved it to break even, I would have had much better results. So for years and years and years, I haven't ever done it, and I have way better results. Can we go now? US dollar, Swiss franc, sure, if you want. Yeah, if you want. So I mean, I'm not, but you can if you really want. Joe, what do you think about New Zealand US dollar? Do you think it comes back to 20 EMA? I like this market, right? So now that we're above the 20 EMA on the daily chart and we've broken past this resistance level, just need to see a pullback to look at buying this one. 4-hour chart, right? Looking for a pullback into here, right? I haven't been on the charts very much the last couple of days. I've been super flat out playing daddy duties. As my wife recovers from her surgery, so that's why I haven't been active. Wife's recovering from surgery. I've been taking the kids to school, picking them up, doing all the grocery shopping. I'm like a single mom right now. So yeah. So New Zealand Swiss franc, New Zealand US dollar, I definitely like it down to this level here. If we can pull back into here, that's where I'd be interested in buying it. If not, if it just continues, let it continue. Don't fear out. And just wait for another pullback, right? And then it'll go long. Pound New Zealand. Yeah, and again, moving averages, this all bunched up now. So you can see that, the 20s flat. These ones are starting to come up. It's just all sort of, it's getting to like that sort of conditions. I don't want to trade that. I don't really like that market right there. Really, no, you're doing all the stuff you shouldn't be doing. I never touch a trade, right? As soon as I open a trade, let's say I enter here, stop loss is there, take profits there. I do not touch that trade. I do never manage my trades, right? It's going to hit stop loss or it's going to hit take profit. One day it will hit one, right? And you let it go. Never manage your trades. Never touch them. I don't mean never manage them. Sorry, I don't mean I just mean don't touch your trades. When you take a trade, you should already be willing to accept that loss. There's no reason you should be, wanting to move your stop loss to break even too quick, because that just tells me you're not accepting the risk that you're taking in the market. All right. Every time you take a trade, you should be accepting that, okay, cool. If I lose this, I don't mind. I don't care if I lose this trade right now. You shouldn't be going, okay, I need to set this take profit to stop loss to break even, or I need to tighten that, just in case, that is playing with your emotions, and that's trading based on emotions rather than, trusting your strategy, right? So it's just big rookie mistakes that a lot of traders do. Tushar, thoughts on interest rates announcement for New Zealand? I honestly don't know. Don't care. I don't look at any fundamentals, Tushar. I look at zero fundamentals when it comes to trading. Frederick, thanks for trading New Zealand. I followed your strategy and I'm still holding. Currently running at 260 pips, not yet. Yes, that trade's going really well at the moment. Euro New Zealand. Yeah, it's around 250, 260 pips in profit. So had you taken all the trade recommendations I had on the webinar, you would have had quite a lot of winners over this month. I think this one was about there. Where did I get out? I think around there, was it? Where's the... It was somewhere there. That's right. I ended up there. Stop was there. So that one was there. Man, I could have held on to that one, but damned if you do, damned if you don't, right? Yeah, no, quite a lot this week. This one's still punching higher. CAD yen. It's been a good month, right? Had you taken all the trades I recommended on the webinars, you would have had a pretty good month. But again, don't forget, I do lose trades as well. I definitely do lose trades. Alison, do you move stops at breaking when you have a target or only when you have... Yeah, so for instance, New Zealand yen, I don't have a target. I'm just letting that run with the trailing stop loss eventually. So with this one, because I don't have a take profit set, just ignore that. That's not my take profit. That's just, I'm just letting it run. So I entered, I think it was somewhere around there last week, this week or last week, I can't remember. Stop loss under these lows here. So I think once this one breaks here and sort of maybe gets a retest and then looks to go higher, once we make another higher low, because I don't have targets set for this one, and this is going to be a trailing stop loss, from when this makes another higher low, I will move this stop loss here to that one there, and then let that run. And every second higher low, the way I trail my stop loss, right? Every second one, I'll move my stop loss to the third one, right? And then it's another, and then you move it right to there. So yeah, I'll let you know when I move. I'll trail this one if you're in it as well. Cool. All right. Any questions? Otherwise, make call there. I might take my dog for a run. It's 5:40. How's everyone going today? You're still in US 30? No way. I mean, how long have you been in that one for? Like 3-4 months? Something like that? November 25th. Wow. I mean, good on you for holding it. Joe, please explain how you draw your trend line. I don't use trend lines. I think trend lines are crap. They're too subjective. I don't use trend lines. I'm not big on, I mean, every now and then I'll use like a pattern, for instance, like on that other, which one? I forgot which market, but one of them we're looking for a pennant. But I don't use patterns that much. I don't use trend lines that much. I don't use a lot of the typical trader stuff, right? I don't use them too much. Thoughts on Aussie yen? Yeah, nice uptrend, right? Nice uptrend. We're pretty extended from the 20 EMA on the daily chart though. So I would expect a bit of a pullback. I wouldn't be buying at these levels. I'd be waiting for a bit of a pullback. So just have the stochastic set out, right? And the setup that I want to be waiting for is when we start to see pullback, we're just looking for this oversold. And that's it. We're going from there. Yeah, trend lines are crap. They're way too subjective, right? Because one person's going to draw on one way, the other one's going to draw on another way. So when it comes to trend line, you're going to have someone that goes like this. Actually, let me get trading view. You're going to have someone that will go like this, right? You're going to have someone that will do this. You're going to have someone that'll do that. You're going to have someone, you know, that'll connect those ones, right? Whereas horizontal, way less subjective because they're kind of just set in stone right there. That's it there, right? Horizontal is by far way more better. I'm not saying trend lines can't be used. A lot of successful traders use trend lines. I just don't. They're way too subjective. You know, it's funny. All the stuff that you're taught in trading, a lot of it you don't have to use. A lot of it's, you know, not that relevant. A lot of the stuff that you see online, a lot of it really isn't that relevant. Yeah, I only use horizontal. And in saying that, I don't use many support resistances as well. Like the only way I use it, I'll go, okay, cool. We have a resistance there. Let's go there. But I'm not going to sit there and go all these levels here. Because now my chart looks really crap and messy and I get confused. I'm like, okay, where do I buy? Where do I sell? Where do I? It's just one relevant support level around where price is at the moment. Cool. That's it. That's all I need. Yeah, same. All right, guys, we may call it there. Yeah, Bitcoin, man, trust me, I'm so bearish. I'm not selling it, but I reckon Bitcoin's back down these levels here, back down to 30. I wouldn't be surprised if we went back down to, you know, 20, 19. It's funny though, because I said it again. If you guys have me on Instagram, you'll see I've been calling Bitcoin bubbles, right? 2017, right? I called it on the day we had the drop, right? Where's 2017? The day that the market crashed was when I okay, today's the day. We had this massive run up. Surely enough, we had the big sort of push down, you know, the bull trap right there. And it came down to right to where I said I thought it was going to come down to, which was 3,100. And but I remember same thing, right? Over here, I think I started calling this a bubble around, I think it was around these levels here, around 14,000 is when I started telling everyone, you know, it's going to pop very soon. But nobody wants to believe me because you know why? Everybody's an expert right now, right? Doesn't matter how long I've been trading for. Doesn't matter how much experience I have. Apparently, I don't know what I'm talking about when it comes to markets. As soon as you start talking to a crypto guy. So yeah, look, I'm calling it again. Bitcoin's a bubble. I'm not going to short it. I don't trade crypto. But you know, it's yeah, I just don't think you know, it's worth I don't think it's a safe thing to be buying right now. I mean, look at that. Anyone that knows anything about markets knows that that cannot sustain for a very long time. That is going to come crashing down. And that I use MetaTrader 4 like 99% of the time. I hate TradingView. I don't like to use it. I have it up right now just because looking at this sort of stuff. But I use it in MetaTrader 4. All my analysis on MetaTrader 4. Yeah. So I'll call them. I know this is a bubble. Back down to 30,000. You heard it here first, all right? Well, I don't know. I mean, I've never traded cryptos, Tusha. I look at them because people always ask me about them. So I give my opinion. But I don't know all about the other cryptos. Like I just do the main one, which is Bitcoin. But everyone always asks me about Bitcoin. But I know there's also the others like Litecoin and whatnot. So yeah, look at that. All right. Same deal. All right. Yeah. No, I don't believe in long-term Bitcoin. I don't believe in long-term Bitcoin. I'm not one of these, you know, people that are like, yeah, Bitcoin's the way of the future. It's the world currency and all this stuff. You gotta understand when it comes to the supply of Bitcoin, right? Apparently there's only like 4 million left. There's 21 million Bitcoins. There's only 4 million left. What's going to happen when that 4 million's up? Apparently they don't know who made Bitcoin. Apparently more can't be made, or it won't be made. So what's going to happen when the 4 million's up, right? There's going to be too much demand and not enough supply. People will lose interest. What's going to happen? They're going to move to another asset. Bitcoin become useless, right? There was an experiment done in 1940 with it was a couple of economists did an experiment in 1940 where they created their own market. It was their own market they made, right? This had no monetary value. They just did it for an experiment, but they didn't tell anyone it was an experiment, okay? So they handed out 100 free coupons for babysitting, for 1 day babysitting, in 100 coupons, right? So you had X amount of people who had one coupon, 3 coupons, someone else had 10 coupons. Anyway, eventually all the coupons were gone. So while the coupons were still being distributed, right, 100 coupons or whatever, and these coupons guaranteed 1 full day of babysitting, right? So you could have a day off. And obviously all the parents were, I'll buy a coupon for $1, right? I'll buy whatever it was, price was. Before you know it, some people will be like, I'll buy 5 coupons, and then they'll sell it to someone else for $1.50, right? Make a little bit of money. Or they'll keep it, they'll hoard it because they want all of them. What happens then? All the supply of the coupons are gone, 100 coupons. Well, now these coupons are worthless because you got 100 coupons, someone has 50, another person has 10, another person might have 2, blah, 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 right? What happens then? They become useless because he's not selling them off, or he's selling them for a higher price. There's too much demand for it, not enough supply. People lose interest, go, fuck the coupons. The same thing's going to happen with Bitcoin. And they actually graphed it out on a chart. I'll try and find it and do a webinar on it. But they actually graphed it out on a chart where these coupons were going like crazy, 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 crazy. And then all of a sudden, everyone lost interest. Bam. What do you think about take profit on pound CAD? If you're buying it, 1.79800 would be a good target. Yeah, definitely. All right, guys, I'm gonna head off. I hope to see you guys in Hedgehow anytime for the next webinar. Yeah, I'll let you guys know. At the moment, it's kind of a little. I thought I'd be a little bit better on time this week, but it's a little bit hard still, just because my wife recovering from surgery and just got 4 kids to look after on my own. It's really hard, right? So yeah, hopefully this is the last week where I'm kind of unsure about the schedule for the webinars. All right, guys, we're going to call it there. Thanks for joining again. Take care, and we'll see you in the next one. Cheers, guys.